All right, welcome back to another episode of Asset Coach and Tax Strategist. If you're a subscriber, thanks so much for subscribing. If you haven't yet, please hit the subscribe button. We drop episodes every Thursday. If you like our content, give us a thumbs up. And please add some comments down below if questions you have or additional content you'd like to hear from us. And so this channel is really about just kind of reading between the lines and looking at what's being communicated in current events, but what's that mean to you and I? And that's what's important. And so a lot of this is really based on my two books, Economic Termites and Farming Assets, and my third book that we're building out right now called Asset Buddy System. And so this is really kind of really funneling around. And so economic termites are really about four specific termites that really affect your wealth. They eat away at your wealth. And we know what termites are. Right? When you find termites, damage has been done. And so economically, what are those things for you and I and our ability to earn and build wealth? Taxes are number one, which is what we're going to talk about today. Inflation is number two. The silent tax that we don't know is how it generates more taxable income and how that creates more revenue for the government. So why the Fed goal is 2%. The third one is time. It's really the only thing that we can't recoup. And what's that cost us when we lose that time? And the last termite, which is really kind of the queen bee, so to speak, is laws and regulations, our politicians. The rules that are laid out there. We follow the rules year over year over year, and then bam, they change the rule, and all of a sudden it affects us negatively from our finance perspective, but we lost that time. Now we're in a higher inflated area, our dollar's worth less, and our taxes are higher. And how do we recoup that? So they all go in line. And so there's other economic termites out there, such as procrastination, debt, blah, blah, blah. But these are the real four ones that affect us. And so let's talk about taxes today. I saw this great. I'm going to share my screen here really quickly. I found this to be very, very enlightening, so to speak. Is this visual. I like using this company, Visual Capitalist. They come up with some really great visuals that are very helpful for me to be able to try to help explain. This is based on the 2022 taxes. So yes, we're in 2025. It usually takes about 2, 3 years, 4 years for us to kind of understand what was the tax situation previously. And so just like anybody trying in a business, trying to reconcile their financial statements, trying to reconcile their book, trying to reconcile their finances. It takes some time, depending on how large it is. You can imagine the government, multi-trillion dollar organization, right? So total US tax from all taxpayers in 2022 was 2.14 trillion. Now, here's where I find it to be interesting. And what we're going to do is we're going to use this as a springboard into talking about income tax brackets, how the progressive tax system is structured. We're not going to talk about, is it a good idea? Is it a bad idea? Should we go flat tax or should we go no tax? That's not the point of this conversation today. The point of today's conversation is really going to be about what are the taxes, who's paying taxes, and when we look at the progressive tax system, how brilliant it is from the government's perspective. Why, since Clinton to today, it hasn't changed in the structure of the percentages per se, except for the top few brackets will change percentage wise, but the organization of the brackets has stayed the same since Clinton. And the reason being is I think the government found their sweet spot. And so it's a dripping faucet. It's a frog in a boiling pot, right? It's all those analogies that our taxes are the same way. And it's really interesting when you start looking at the economic termites, how inflation drives up the cost of goods. The cost of goods cause you and I to say, hey, I need to make more money. We go make more money. And guess what? Since we're making more money, what happens to our taxes? Our taxes go up. So our expense goes up. What happens to our net income? Drops, actually, depending on how our income increases. But when you have your cost of living, the inflation going up, that really is affecting us. And so this tax bracket, and so let's see what the quote unquote people that are taxpayers are paying. So the top bracket, the top 1%, 855 billion came from the top 1% of the wealth. Okay. Now, when you drop down to the top 1 to 5%, there was 449 billion. This is the wealthiest 5%, made up of 61% of the 1.3 trillion. So 61% of the 2.14 trillion, which is 1.3 trillion. Sorry. The US tax income in 2022. Okay. Now we shift over here to the top 5 to 10%. Okay, that's $235 billion. Then we go from the 10% to the 25%, that's $321 billion. And then we shift over the top 25 to 50%, it's for 214 billion, and the bottom 50% are 64 billion. So the wealthy should be paying more taxes. They are. They're carrying the load. When you look at this, they are carrying the load. So the very interesting aspect of is really the top 50% of income earners, of taxpayers in the United States, pay. The only thing they don't pay of the 2.4 trillion is $64 billion. So let's look at the brackets, and let's dive into the brackets, and let's look at how the progressive tax system works. Okay, so what is a progressive tax system? First of all, a progressive tax system is where you have income ranges. We call them brackets. You have income ranges, so $1 ranges to another dollar, and that's taxed at a percentage. So all the income in that bracket, that range, is taxed at that percentage. When you go over that income range to the top part, you enter the next tax bracket. Okay. And there's an income range there, and all the dollars earned in that income range pays that percentage. Okay. So then all of a sudden you add the first bracket of income, the second bracket, and that's your total tax liability. So I'm going to share my screen and break this down for you visually so you can see what this looks like on the percentages and on the incomes. Now, I'm going to use the 2022 numbers brackets because of the visual we had was 2022. All right. Now, just know as we go through this planning process, as we go through this mental process, that in 2025 the numbers are different. They're higher. And what we'll do is we'll go to that as well, and I'll show you that as well. But that'll be towards the latter part. So bear with me, stay with me. This is going to be maybe a lot. I don't know. But I do feel like this is so important for you and I to understand, because when we reach out to our tax preparer, our CPA, enrolled agent, whoever's doing our taxes, and we ask them, what's our tax rate? That's called the effective rate. The effective rate is the taxes on your first dollar earned, so that first bracket, to your last dollar earned, that top bracket. Okay. And so what that tax amount is based on your taxable income is your effective rate. The marginal rate is your top bracket. So your last dollar that is earned, what part of the bracket is that in? And that tax rate is your marginal rate. Okay. So when people do strategic tax planning like we do for our clients, the first dollar we save is that top bracket, the more expensive one. And we save from that top dollar and it work our way down. This is why the wealthy get wealthier, because their first rate of return is their tax savings. Why? Because it's their largest expense. The government is our largest expense. Our taxes are our largest expense. Okay. And so we need to understand this. But I run into so many people who don't have a clue about how our tax system is structured. And I'm not talking about understanding the tax code. I'm talking about understanding the tax brackets and how you're taxed based on your taxable income. Okay. If this is your largest expense, think about your mortgage. You think and strategize how to reduce your mortgage. So when interest rates are at 5 or 6% on your mortgage and they go down, what's the first thing you do? You refinance. You lower that expense. Okay? When you look at your grocery bill, when you look at any other expense in your life, you figure out as an individual, as a family, whatever the case may be, how do we reduce our expenses, keep the same lifestyle, enjoy the hard work we're working to earn the income we have, but do we do this on the tax side? And it's very difficult because the tax system is made for us to feel like it's extremely complicated. And it is. Even though it's written in English, it is a different dialect of English. It does take a specific understanding of how the tax code is intertwined with you and your situation. But understanding the basics of your tax bracket and how your tax is calculated, I think it's important for us to understand. So let me go back to sharing my screen and let's dive into this. Okay, so this is the 2022. What I want us to focus on first, I'm going to hide all this stuff here because this is a breakdown of exactly what we're going to talk about. But I want to go through this bracket first. Okay, so I'm going to grab my little writing tool, and I know, Bob, you're getting nerdy. Absolutely. I apologize, but you need me to. So let's go into this. So the first income tax bracket, if we were to look at this, is from $0, so $1 earned, to $20,550. So every dollar in here is going to be taxed at 10%. But here's what's interesting about the government is that they give you a reprieve within this first area. Okay. The reason being is that when you look at this first bracket, if you only make 20,000, you get a standard deduction as an individual and or as a married couple that actually wipes away the majority of this taxation. Okay. So the government is designed it to where, man, you're only making 20 grand. We're going to try to give you an opportunity to keep all of that. Okay. Now, the moment your money goes above 20,551 to 83,550, now you're in a 12% tax bracket. See how it's progressing? The rate of taxation, the percentage is progressing. It's going up based on your income going up. So now we have the taxation on the first 10% right here. And then if we made this total amount right here, this 83,000, my taxable income is 83,550, then that difference between 20,551 and 83,550 is taxed at 12%. That is 7,560. You add these two up, and that is your total tax rate. Okay. Now, what you do is that's again marginal rate. Okay, but you blend these together. This total tax dollar, and based on your taxable income, is your effective rate. So whatever that percentage is. Okay. Now let's continue to go forward. And so let's say you make $350,000. Okay, you're going to be in the marginal bracket of 32%. You're going to be paying 69,000 plus the 350. And I'm going to show you what these calculations look like, but I really just want to give you a really quick synopsis. So if I were to grab my calculator and say 350,000, you're welcome to do this, minus 340, the bottom part, 101, equals 9,899. We're going to multiply that by 32%, okay, because that's your marginal rate. So times 0.32 equals, that's $3,167.68. So we're going to round it. The government actually rounds down for you, but we'll just round it up. Now we add this number to the 69. So we have the 69,294, and that is our total tax rate. So let me add this. Let me 69,294 to complete the calculation. So my taxes that I owe is 72,462. Okay. Boom. There you go. That's the amount I owe. Thank you very much. Pay that to your waitress, right? It's a fair amount of money if you're making $350,000. That's how it's calculated. Very basic. Now, it seems overly complicated because once you have your taxable income, then we have credits, right? Child credits, all these other kind of credits and different ways to lower and increase your taxes. So, but I'm just trying to keep it very high level at this stage. So before we continue to go look at the different income amounts from 100,000, every 50,000 increments to the top tax bracket of 37%. Okay. I need you to understand that this is a dripping faucet. This is brilliant of what the government has done in giving us the feeling that, yes, we're paying a lot of taxes, but not realizing the increment change over a period of time as our income increases. It's very nominal, but it is felt. So I know that doesn't sound like it makes a whole lot of sense, but it will as I break this down a little bit more. Okay, so what I'm going to do is unhide everything here. Okay, woo, big chart. So what I'm going to do is right here, let's focus right here first. Okay, I just did 100,000. We're in a marginal rate of 22%, but our effective rate is 13.23%. Okay, so we owe $13,234,000 in a $100,000 tax bracket. Okay, and that's an effective rate of 13.23. That's our baseline. Okay, now let's go back to our visual. They're in the bottom. That's the bottom 50%. Okay, this is why the wealthy are paying so much more, because they're paying higher tax percentages. Okay, so let's go back into this. So I did 50,000 increments. Now this is important because look at this. The tax went up 11,000. The total tax went up $11,000. Okay, in just a $50,000 increment of income, it went up. Okay, so 11,000 divided by $50,000. That's a 22% increase, right, of taxes. Well, that makes sense because I'm in a 22% tax bracket. But my my effective rate only went up under 3%. But what's this cost me? A total of additional 11 grand. That's a lot of money when you look at it. That's a 22%. That's a lot of money, right? So let's look at the 200,000. Now we enter the marginal bracket of 24%. Okay. And so let's take a look at that. Total tax owed, 35,000, which is an increase of just over 11,000 from the previous. But look what happened to my effective rate. It didn't go up a whole lot. It only went up 1.68%. So you and I feel the 35,000, but this is why I say it's a dripping faucet. These increments are very minimal. Very minimal. Okay? But as we get to the next income tax bracket and we go to the marginal rate, so let me hide all this, okay? If I can do this. Let me do this, actually. Let's hide the 50%, the 50,000 increments. All right, so now I'm in the 300,000, hide. There we go, 350. Now I'm in a 32%, okay, marginal. So when I look at my total tax liability, now it is 72,000. It's only a $12,000 increase from my $300,000 income, which is not even a 1% increase. So you see how as we go through this process and when we see how our income increases incrementally, how the taxation incrementally, look at that. And it's barely percentages, to where when we get to the last marginal bracket, which is 37%. Now, if you're watching this and you're like, well, if you're making over 650,000, you deserve to pay more taxes. No, you don't. None of us deserve this. We don't deserve this. Our country is an amazing country. We love our country. We love everything about it. It's not perfect. No one says it's perfect. We have our issues because we, man, are part of our country, and we are a sinful nature. We have greed, we have pride, we have ego, right? We have these core root issues in us that drive us to make decisions that sometimes are not very good decisions, but they also create good decisions. They're two sides of a coin. Okay. So we live in a great nation. We have the strongest, biggest military, right? Not by human count like China does, but our military is larger. We spend more money on our military. We have a fraction of the people, 1 billion less people than China and India. But we, as consumers, as taxpayers, drive the world economy. The reason why China, if you heard me say this before, the reason why China is suffering right now is because we are not playing ball with them anymore. Enough is enough. But Bob, their GDP went up 5.2%. You can't compare that to the United States. They need double-digit GDP. Why? Because they have 1.4 trillion people. Because they're not a free capitalistic society. They're a faker. They're an imitator. They're trying to be capitalistic by putting the thumb down on the humans of what they can do. And they're reaping the reward of that. Because we said, no more. The rest of the world will continue to go down this pathway as well. There's a lot of countries that are still doing business with China. China is still making a lot of negotiations because of the big, bad United States of America. Look at what they're doing. What are we doing? We're saying don't screw us anymore? Don't take advantage of us anymore? This is our fault. It's not their fault. We finally recognize, oh, why are we doing this? This is our fault. And we're correcting it. And now because we're correcting it, we're big bad America. Then why are your people flooding here? Why do your people want to be here? Because of opportunity, the human spirit, because who we are as a republic. Okay? And this, you need to understand how your biggest expense, how the government is getting paid. This is why I'm a big fan of what Trump's doing with the tariffs. But Bob, the tariffs economic, stop it. Trump is a negotiator. He's using every tool that is available, and all these countries charge us tariffs. We can't export the amount of goods and services here to other countries because of those tariffs, those taxes on us makes our goods and services more expensive. Yes, we are expensive here already. That makes it even more expensive. Okay? So what we're looking at is reciprocation. That's why we had this reciprocating tariff period of time. And now what are all these countries doing? Coming to the table to negotiate. What has Trump been able to do with our country, our companies here in the United States? Invest in the United States. What are a lot of these other allies, trade partners? A partnership is a reciprocal relationship, not a one-sided relationship. Now they're all coming back to the table and negotiating. Why? Because of what we're talking about right now, your tax liability, your and my tax liability, our largest expense. Because even though we're paying through the nose on our taxes, what's the government continuing to do? Spend, print, borrow. Why? Because they're not generating enough tax revenue because their spending is out of control. That's what the whole point of Elon Musk and Doge was enough. Just like you as a family. Okay. You as a family, spending's out of control. Hold on. We're using way too much credit cards. Our debt is high. The interest rates on our credit cards are high. We need to make some changes. So what do? Go spend more? No. You stop spending. So what the government does, they go spend more. Whoa, the spending ceiling is too low. If we don't raise the spending ceiling, then we're going to have to shut down the government. Well, stop spending. Good. But it's gotten out of control. Why? Because all the politicians want to make sure that you love them. No politician should be a multi-millionaire. There shouldn't be. There should be term periods where they're only allowed to serve for a certain period of time, not lifetime. It should not be a career. It should be an honor. It should be a position of we the people, not you the politicians, the way it's been. And all those decisions, all those career politicians on both sides of the aisles have created this issue. And so the man who steps up and says enough is enough is why they hate him. It's not because of what he says. It's because of what he's doing. Sure, he says things off the cuff. I actually like it. It's entertaining. He knows that. He's trying to keep the focus on him. Well, because he's arrogant. No, because he's trying to keep the focus on him so we, his team, his administration, can go to work and get crap done. That's what a leader does. Takes the good and definitely takes the bad. Why? Because our largest expense is our tax dollar. And we, the people, deserve a leader to say, time out, let's revisit this whole situation, and let's start anew as best as we can. In this period of time, we have a trade partner, China, right? Over the last decade, we've been trying to separate from them. They're not a very good partner. And all of a sudden, what happens? Technology continues to improve. Now we have AI. America is the largest investor in AI from a dollar perspective. That is great news. Bitcoin, cryptocurrency, Trump wants that to be here in the United States. Our laws and regulations rejected it because we were scared of it as a country and our leaders. We thought it would take away our power and our control. Trump's like, no, it actually can increase it. Encourage this. This is the future. Shoot, every single one of our politicians use credit cards. How many of them carry cash anymore? How do you not see that? Who carries change around? Right? How long have we been debating about not printing pennies anymore because it's too expensive to make one penny costs like 5 cents to make 1 penny. Those are bad decisions, by the way. You stop making a penny. Why is that penny worth? Why does it cost 5 cents to make a penny? Because of inflation. It devalues that. So get rid of the penny. Now we just saved 4 cents. Makes sense. Excuse me. I didn't know what else word to use. So understanding your tax bracket, understanding your taxes. When we meet with our members, our clients, we go through this. We walk through their tax return. Our members, we walk through their last filed tax return. And then we say, hey, if we did tax planning, here's what the effect would look like, and here's how we can justify it. And then every year we file their taxes, we show it side by side so they can see their income going up, their tax liability going down. You want that. Woo, how do you do this? You want your income going up and your tax liability going down. That spread is yours. You're working hard for it. So I find it very important for us to understand, especially if you're in the top 50% of income earners or taxpayers. You need to know this. Now, it's not about lying, cheating, and deceiving the government. The IRS, they're our tax partner. They give us a rule book and guideline of what we can do. It's not a rule book of saying you can't do this, you can't do that. No, it's telling you what you can do. Just like any game, any sport you play, you need to know the rules to be able to play the game effectively. Then when you know the rules, you can strategize. And that is what tax strategy is. Strategizing the tax code. And it's completely legitimate and you're allowed to. Why? Because the IRS gives you the guidelines. Simple. And if you can't save more because you've reached all the guidelines, then you need to strategize with your money on how to improve your asset base, meaning other businesses, other investments, other assets that generate passive income, and how to structure that, how to organize that. That all affects your taxes, up or down, because that's what the tax code tells us. So hopefully this was helpful. Hopefully this gives you some action, right? Take action. Start learning. Start understanding this stuff. Go back to my previous videos. We talk about economic termites. Go buy my book. Read the basics of it. Read Robert Kiyosaki's Rich Dad, Poor Dad, Cash Flow Quadrant. The information is out there. But if you go to the other videos in my channel, we break a lot of that down in a very simple way, condensed way, so you don't have to read 300 plus pages of cash flow quadrant. You can spend a half hour to an hour watching my videos, subscribing, giving me thumbs up, right? I'm self-serving now. But educating yourself. There's a ton of guys on and gals on YouTube that are awesome. A lot of my content is because I watch and listen to them and I'm like, dude, that is smart. That's brilliant. I'm not the smartest tool in the shed. I'm just the guy who says, that's a good idea. Let's do it. I'm not scared to make that decision because I know I'm not going to die doing it. I know I'm going to learn from doing it. Whether it goes my way or it doesn't, I'm going to learn something. Now I become smarter and better and I can go learn something else. Invest in you. That's all I'm saying. You're worth it. You're leaving your family 8 hours plus a day, 5 plus days a week. You deserve to understand why. Your biggest expense exists and what's the problem. This is not a political conversation. This is get your shit together conversation. Because if you don't do this, stop your whining about your tax liability. Stop it. You don't deserve the right to whine about it because you're not willing to understand about it. Don't have to be an expert. Don't have to know how the whole tax code works. But you should understand the basics of how your tax bracket and how your taxed is. So hopefully you like this content. Give me thumbs up. Subscribe if you haven't subscribed. Looking forward to the next Thursday, dropping another episode for you guys. Thanks so much. Greatly appreciate it. Have a blessed day.